How do some people achieve financial freedom so fast while others stay stuck? It's not luck or a hidden secret. It's their financial strategy. This video uncovers the 4 fastest and smartest ways to build wealth, even if you're starting at age 35 or older. These are proven methods that don't require high risk or endless free time, just a clear plan and the discipline to execute it. Method number 1. Automate regular investments through index funds or ETFs. By the time we reach our mid-30s and beyond, most of us are no strangers to financial worries. Paying for our children's education, managing mortgage debt, or facing the ever-lurking question, have I truly prepared enough for retirement? When time becomes limited and your risk tolerance starts to decline, what you need isn't a complex investment strategy, but a simple, safe, and effective one. One of the fastest and smartest ways to build wealth in your 40s and 50s is to automate regular investments through index funds or ETFs, exchange-traded funds. Instead of tracking the market every day or analyzing stocks every hour, you can quietly build wealth by setting up an automated monthly investment into low-cost index funds like the S&P 500, Vanguard Total Stock Market or VTI, or Schwab U.S. Broad Market ETF SCHB. All it takes is linking your bank account to an investment platform, setting a fixed contribution, say $200 to $500 a month, and letting the system handle the rest, purchasing the fund, reinvesting dividends, and rebalancing your portfolio. No guesswork, no disrupting your busy schedule. This is one of the most practical and efficient approaches for full-time workers with families and limited time. Many financial experts endorse this method because it brings together 3 crucial factors: low cost, high returns, and controlled risk. Index funds like VTI or SPY often have management expense ratios as low as 0.03% to 0.05%, which is significantly less than traditional mutual funds. Meanwhile, the S&P 500, representing the 500 largest companies in the U.S., has delivered an average return of nearly 10% annually over the past 50-plus years. When combined with the power of compound interest, your monthly contributions can grow substantially over time without any high-risk speculation. What makes this strategy particularly well-suited for middle-aged investors is its stability and security. Because index funds spread your investment across hundreds or even thousands of companies, your risk is diversified. You won't be heavily impacted by the failure of any single business. And with high liquidity, you can access your money when needed, unlike real estate or small business ventures that often come with complex exit processes. After 10 to 15 years of disciplined investing, you could build a 6-figure portfolio, enough to retire early or establish a steady stream of passive income. For example, if you invest $300 per month into an S&P 500 index fund and it grows at the historical average of 10% per year, you'll accumulate over $100,000 in just 15 years, and that number keeps compounding as long as you leave your investments untouched. To get started, just follow 3 simple steps. Open an investment account on a trusted platform like Vanguard, Fidelity, or Charles Schwab. Choose well-performing index funds such as VTI or SPY, and set up automatic monthly contributions. After that, all you need is consistency, and time will take care of the rest. Automating your investments through index funds isn't a get-rich-quick scheme, but it is one of the most reliable and sustainable strategies for building wealth in your 40s, 50s, and beyond. It's not just a method for growing your money quietly. It's a way to regain control over your financial life, lay a solid foundation for the future, and step confidently into retirement with peace of mind.
Method 2. Leverage tax advantages through retirement accounts, Roth IRA or 401k. In midlife, when financial pressures start to mount and the window for retirement planning grows smaller, making the most of every invested dollar becomes more critical than ever. One of the fastest and smartest ways to do this is by leveraging tax-advantaged retirement accounts like the Roth IRA and 401k. These aren't just savings tools, they're powerful platforms for growing wealth without having it slowly eroded by taxes over time. This strategy is built on a simple yet incredibly effective principle: reduce or eliminate taxes to maximize long-term investment growth. With a Roth IRA, you contribute after-tax income, but your gains grow completely tax-free if you withdraw after age 59 and a half and have held the account for at least 5 years. In contrast, with a 401k, especially if your employer offers one, you contribute pre-tax income, which lowers your immediate tax bill, and your investments grow tax-deferred until you start withdrawing in retirement. The most obvious advantage is the massive tax savings, potentially worth tens of thousands of dollars over a few decades. Instead of paying taxes on your investment gains year after year, you allow that money to compound, reinvest, and grow exponentially. It's the kind of difference that could determine whether you retire comfortably at 65 or need to keep working until 75 just to stay afloat. Beyond that, many 401k plans offer employer matching contributions. For example, if you invest 6%, your company might add another 3 or 4%. That's free money accelerating your financial progress without you lifting an extra finger. The best part? You don't need to be a financial expert to take advantage of this. You can open a Roth IRA through popular investment platforms like Vanguard, Fidelity, or Charles Schwab. Choose stable index funds like the S&P 500 or VTI, and set up automatic monthly contributions. For a 401k, you simply need to contact your company's HR department and enroll. Everything can be automated, no daily tracking, no stress. For example, if you invest $6,000 per year into a Roth IRA for 20 years with an average annual return of 8%, your account could grow to over $275,000, and all of that growth is completely tax-free when you withdraw in retirement. That means you're not just saving for the future, you're building real net worth rather than watching it get chipped away by taxes. Here's the bottom line. The earlier you start, the stronger the compounding effect. Don't let retirement accounts be just a vague long-term goal. Turn them into a proactive, intelligent strategy that helps you lower your tax burden and build lasting wealth. While others are still chasing short-term market gains or hoping for get-rich-quick opportunities, those who harness the power of Roth IRAs and 401ks are investing in true, sustainable financial freedom. When you allow your money to grow in a tax-sheltered environment, you're not just saving, you're accelerating your wealth-building journey, quietly and effectively. And whether you're 35, 45, or even 55, it's never too late to start.
Method 3. Create passive income from digital assets and online content. In midlife, when time becomes scarce and energy is no longer what it once was in your 20s, trading time for money is no longer the ideal option. More and more people are turning to a more sustainable solution, generating passive income from digital assets or online content. This isn't just a passing trend, it's a smart, effective strategy perfectly suited for middle-aged Americans who want to accelerate their financial journey without burning themselves out. Digital assets are products you create once but can earn from repeatedly. Examples include ebooks, online courses, ad-monetized blogs, tutorial videos, or digital products like templates, guides, and software tools. The biggest advantage? There's no need for physical space, inventory, or ongoing operational costs. With just a computer and internet connection and some specialized knowledge, you can start building digital wealth right from your home. The greatest strength of passive income through digital assets lies in its ability to generate revenue 24/7, even while you sleep, travel, or spend time with your family. When someone buys your course in the middle of the night or downloads your ebook from another state, you're earning money without clocking in. It's income detached from labor, something most traditional employees don't have access to. Even better, the startup costs are remarkably low. You don't need to invest thousands in equipment or advertising. Platforms like Amazon Kindle for ebooks, Teachable or Udemy for courses, YouTube for tutorials, or Gumroad for digital downloads allow you to begin with little to no upfront cost. If you have knowledge in a specific area, such as accounting, wellness, personal development, or career skills, you already have the raw material to build a long-term income stream. Of course, it takes initial effort to create quality content, but once your system is up and running, you no longer have to chase income every day. That's what makes this model especially attractive for midlife individuals juggling careers and family. It enables you to grow your wealth quietly, sustainably, and without pressure. Picture this: a blog you build over 6 months by consistently sharing valuable content. Over time, it starts gaining steady traffic and begins earning money from Google AdSense or affiliate links. Or imagine a weekend recorded tutorial video that continues to bring in monthly income without needing any updates. That's the power of digital assets, compounding reach and automated income. On top of the financial benefits, creating digital content offers a sense of autonomy and creativity, a powerful antidote to the stagnation or lack of passion many people experience in their careers during midlife. Seeing your knowledge provide value to others and getting paid for it can bring a deep sense of personal and financial fulfillment. If you're looking for a way to increase your income without sacrificing more time or energy, building digital assets is well worth serious consideration. It's not only a low-cost, accessible investment channel, but also a quiet yet steady path toward financial freedom, helping you take control of your life and prepare for a retirement that's secure, confident, and stress-free.
Method 4. Own rental property or invest in REITs. After age 35, most of us start thinking more seriously about protecting and growing our wealth in sustainable ways. Among all the popular investment channels, rental real estate and REITs stand out as a powerful two-in-one solution. They generate steady income while also offering long-term growth potential. You can invest in real estate in two main ways: directly owning rental properties or indirectly through REITs. With rental property, you purchase physical assets like apartments, single-family homes, or commercial real estate and lease them out to earn monthly cash flow. If you don't want the hassle of managing properties, dealing with tenants, or handling repairs, REITs offer a simpler and more liquid alternative. You invest via the stock market and receive regular dividends from rental income and property sales. The most compelling advantage is a stable income stream and compound growth over time. With rental properties, you earn rent monthly, while the value of the property often increases over time, thanks to inflation and growing demand. REITs, on the other hand, provide exposure to a diversified portfolio of assets: shopping centers, offices, residential buildings, and hotels, and typically offer average dividend yields of 3 to 5% annually, along with potential appreciation in share price as the economy expands. For those in midlife, sustainability and predictability matter more than ever. Unlike volatile stocks or risky crypto assets, real estate, whether direct or via REITs, tends to be more stable and easier to manage. You can rely on real estate cash flow as a pillar of your retirement plan or reinvest it to build long-term wealth. A perfect example: if you invest in REITs through a Roth IRA, you can enjoy tax-free dividends and capital gains as long as you withdraw under qualified conditions. This is a strategy many seasoned investors use to grow their wealth without sacrificing liquidity. Unlike physical real estate, you're not locked in. You can sell your REIT shares anytime if your financial needs change. Even better, you no longer need to be wealthy to start investing in real estate. With the rise of platforms like Fundrise, Realty Mogul, or the Vanguard REIT Index Fund, VNQ, you can begin with just a few $100s. That means real estate investing is no longer limited to millionaires or finance professionals. It's open to everyone. Rental real estate is a true dual-purpose asset. It brings in monthly passive income and builds your net worth over time. For people 35 and up, when stability and asset protection become top priorities, this is an ideal solution. Instead of betting everything on the stock market, real estate helps diversify your portfolio, reduce risk, and build a stronger foundation for your financial future. Whether you choose to buy a traditional rental property or invest through REITs, this remains one of the fastest and most sustainable ways to build wealth after 35.
When your assets don't just sit idle, but actively generate income, you move closer to financial freedom without sacrificing more time, energy, or taking unnecessary risks.
Method 5. Invest in yourself to accelerate income and build wealth. While the first 4 methods focus on intelligently growing the money you already have, this 5th strategy targets the source of it all, your earning power. For many people over 35, there's a frustrating reality. You've hit an income plateau. Annual raises barely keep up with inflation, and it feels like your ability to save and invest has hit a ceiling. This is where the fastest and most powerful wealth-building tool comes into play: investing in yourself. This isn't an expense. It's the highest return investment you can possibly make, providing the high-octane fuel needed to supercharge all other strategies. The core principle is simple. Dramatically increasing your active income is the most effective way to shorten your journey to financial freedom. While passive income is the end goal, a significant boost in your primary salary acts as a powerful lever. Think about it. A modest 3% annual raise is good, but a 20 to 30% salary jump from acquiring a new in-demand skill is life-changing. That substantial increase is the extra capital you can then pour into your index funds, max out your Roth IRA, and build your asset portfolio faster than you ever thought possible. So how do you achieve this? Focus on 3 key areas. First, pursue professional certifications in your field, like a PMP for project management or Google Analytics for marketing. These are tangible credentials that employers value and directly translate to higher pay. Second, develop high-income skills that are in constant demand, such as data analysis, coding, digital marketing, or AI implementation. Platforms like Coursera, Udemy, and LinkedIn Learning make it accessible to learn these skills from home. Finally, master soft skills like negotiation, leadership, and public speaking. These are often the missing link that elevate you from a skilled worker to a high-earning manager or leader. The return on this investment is staggering. Imagine spending $2,000 on a sought-after certification that helps you land a $10,000 annual raise. That's a 500% return in the first year alone, a figure the stock market can rarely promise. This creates a double compounding effect. Your skills compound into a higher salary, and that higher salary then compounds in your investment accounts. Furthermore, unlike a volatile market, your knowledge and skills are assets you fully control. They provide career security and make you adaptable in a changing economy, which is priceless for anyone planning for a stable future. Ultimately, investing in yourself is about breaking free from the income ceiling that holds so many people back in their mid-career years. It's about taking control of your financial destiny instead of passively waiting for it. While other methods help you grow your wealth, this one builds the powerful engine that gets you there. It's the proactive step that ensures you have more money to invest, allowing you to reach financial independence faster, safer, and with more confidence than ever before. Building wealth doesn't have to be complicated. Just choose one of the 4 methods we covered and stay consistent. That single smart step is what gets you closer to financial independence. For more real-world, effective strategies designed for those over 35, be sure to like and subscribe to the channel. Now we want to hear from you. Which strategy are you using to build your future wealth?